Oh man, are we live? Yes, we are. Good morning. Welcome back to the morning show. Hope you all had a great weekend. We got a lot going on this morning. A new guest on the show today, David Rath. Very excited for that. He brought along some charts. Thank you, David. So he'll join the show at 9. Then we'll have Ian Cully join the show at 9:30. Talk some fixed income, commodities, currencies. It's been a while since Ian's been on the show because Mondays are usually a weird day between holidays and whatever. So a lot going on today. We got JC here. We got Steve here. We got you here in the chat. Good morning, everyone. Good morning, Chris, Mary, Sazo, other Chris, Rachel, Peter, Sam. What's up? What's up? Let's just get the show started, shall we? We shall.
Hey, good morning, y'all.
Hey,
are we past our portfolio accelerator hangover? Are we through it?
Are you?
I am.
Yeah.
But then I went into the city on Saturday and had a fun day. So
saw that.
Which leads me to my next question. How about them New York Knicks?
How about those Knicks? The New York Knicks.
Choo-choo.
By the way, I've always said it. I've said it for a long time. Brunson is such a stud. Played great out of his mind. Keeps getting better. He's got a head on his shoulders. I've never given a New York Knicks so many compliments, but this kid is such a stud. The other guy, he sucks. What a piece of garbage. The guy they're paying all that money for, what's his name?
Randall. He didn't play, right? He was out?
Oh, he was there, but you wouldn't have noticed him.
No, he didn't play.
Oh, yes, he did.
He did? Oh, wow.
That's how bad he is. You didn't even realize he was there.
All aboard
what a
the
hot
train.
Piece of garbage.
All aboard the hype train. Choo-choo. Let's go.
Brunson's a stud, though. All right, let's get into the markets.
All right.
All right, let's get into market futures. Big nothing burger across the board this morning, except for maybe bonds, you can argue, are inching higher. So Dow futures, flat. S&P futures, flat. NASDAQ futures, flat. 30-year bond futures up 75 basis points. It's not nothing. Gold up the same, 75 basis points. Silver up 1%. Copper flat. Oil down 1%. And the dollar mixed in early trading here with the volatility index back up towards 14. And U.S. 10-year yields hovering right around 4.1%. Nothing exciting going on in the funny money. Bitcoin, Ethereum, Solana, all pretty much flat on the day. Not much going on. Strazza, what stands out?
I think there is something interesting, right? We talked about it on here? I know we talked about it at the accelerator last week, but the potential that's looking more and more likely for these little tops or little continuation patterns that look to have failed lower to actually or look to have broken lower to be failing and reversing higher. Kind of paying attention to that. Like you see Bitcoin.
Yeah. Well, you were pointing that out in the banking stocks before, right?
Which is to a lot of people probably not intuitive at all, right? To say, hey, the price action in the banks and then have any read on the price action in cryptos. But as we've kind of always viewed these things, cryptos, some call an asset class. We just kind of consider a subgroup of technology, right? They're stocks, the risk assets. So.
Yeah, but also it's really a function of the bull market, which is what you were talking about when you were referencing the behavior in the bank stocks.
Yeah.
You see that sort of behavior. So I don't necessarily.
Oh.
I don't necessarily know that it's because of a correlation there between bank stocks and crypto, as maybe it's more of you see that a lot in bull markets.
It's correlation of stocks and stocks, or stocks and cryptos.
Yeah. Okay. All right.
You don't like it?
Yeah, I think your first point was dead on. You see that a lot in bull markets. You see that a lot in healthy environments where you get a consolidation. The textbook tells you that it should resolve higher.
Yeah.
It resolves lower. Everybody gets stopped out, by the way, including us in some of those cases. And then it knocks everybody out and then rips higher, right? So it's up to us as investors to either get back in and recognize that that's actually really bullish behavior.
You know, these reversal patterns, some of the best ones are just these short-term tops in the context of primary uptrends. They look real toppy. The bears get involved. They get trapped. There's a hook and rally. You see it all the time. And it's thank God we're technicians and trend followers, because it's very easy to think, oh, this is breaking lower, right? You got to kind of zoom out, remind yourself of the context and what the primary trend is. And if you do, you understand this pattern is more likely to fail than complete. Why?
I love the hook and rally. You know, it reminds you when you're in college and you're drinking too much, you know, the old puke and rally, you know? Keep the party going. Let's go. So this is kind of like that. They puke and then rally, right?
It's the shake and get some. Isn't that what you call it?
I like the hook
Shake
and
and
rally.
bake.
Yeah. I don't know. It doesn't rhyme. There's no alliteration. I don't like it at all. It's hard to remember, right? I got one.
Yeah.
I don't know why journalists
Oh boy.
are in the business of hurting their readers and making sure that they mislead their audience as much as possible. Did you see the Wall Street Journal this morning? What the fuck are they talking about?
Who hurt you? Who hurt you this time?
I did, but what are you referring to? Specific? You got to be more specific.
The S&P 500 rallied to records on the back. By the way, I get quoted in the Wall Street Journal all the time, so I'm not hating on the Wall Street Journal, but there's certain journalists like, what did you even fucking look before you wrote this nonsense? The S&P 500 is rallied to records on the back of just one sector. You know, they're talking about how it's only tech that is above their 2021 highs, when we know it's not true at all. That's bullshit.
I saw some pretty bad charts, borderline chart crimes, floating around Twitter this weekend.
What are they doing? Like, seriously, journalists, get your shit together. It's unbelievable. So throw up slide 9. Like, seriously, they think you're dumb. And I don't buy that they're wrong or dumb. They're very smart people. They're doing this on purpose.
Yeah.
This is malicious.
I agree.
It's fucking nonsense. Go up and throw up the next chart.
But, at the same time, you could call it malicious. I could also argue they're really just doing their job.
What? Misleading their audience?
Writing things that are going to draw viewers and clicks.
No, agreed.
It's also highly likely that the person that wrote the article did not write the headline.
Can you put the chart up, please,
yeah.
Spencer?
Totally.
So,
great point, Spencer.
Yeah. Actually, not highly likely. It's I can almost guarantee it. So, yeah.
So here's arguably a more important sector than technology. Also above those former highs. So no, it's not just tech, you morons. It's actually the sector with the highest correlation with the S&P 500 historically of all S&P sectors. Also above the 2011 highs. No? Nobody else cares that journalists are out there lying to the public in real time?
I mean, no.
I
know you're not.
I care about industrials. I care about this chart. I don't know if I care about the one before that, the slide before that, but I care about this chart.
Talk to me, Strazza.
This is nothing new, right? You don't read the paper enough. You would be used to it by now. You could pick up a paper, a financial paper every day and have something to complain about.
I mean, without having read the article, I'm assuming they're probably referring to just the market cap gains, right, of the top 7 stocks or 6 now, whatever.
The best one is when they have like the Magnificent 7, right? And then they show like, quote unquote, all the others, and they just cherry pick like China, like all the underperformers. They completely leave out Latin America. They completely leave out Europe, right?
Well, because
by the way, European equities making new all-time highs. They don't have any tech stocks there. It's all industrials.
I know the chart you're talking about.
Which chart am I talking about?
something going around on Twitter like that this weekend.
Yeah, no, I
Yeah.
saw it.
Yeah.
It's like they take the Magnificent Seven, right? And then they just
Energy,
cherry pick, right? Energy.
China, EM. I'm surprised frontier markets weren't in there, and like Thailand,
Right.
very random.
Right. Exactly. Here, I have a good one here. So here's also what they don't tell you. Throw up new slide 11, Spencer.
New slide 11.
New slide 11. So the worst offenders, the worst humans on the planet, these are terrible people. Terrible people. They will specifically anchor their returns to the beginning of 23 to purposely mislead their audience because they're assholes and purposely leave out the first 6 months of the bull market when none of these Magnificent Seven stocks participated.
Yeah,
Tesla, Meta, Amazon, Google, Nvidia, Apple, Microsoft, all of them were down in the first 6 months of the bull market while everything else was up. These assholes won't tell you that.
Explain what you're doing here and what this chart shows, though. This is 2022, no?
This is the back half of 2022. So this is the first 6 months of the bull market.
Why?
Right? So market bottomed in June. When you go back and look, almost everything was already working in the back half of 22. It wasn't until the first week of 23 that you got rotation into large cap tech. Before that, everything else but large cap tech was working. So if anything, those tech stocks were catching up to the others, right? So it's not just those names working. Those were actually the laggards that caught up to the leaders.
You know, we forget so quickly because the NASDAQ was so good last year. NASDAQ 100 bottomed on December 28th.
Yeah.
Right? So you're explaining the whole back half of 2022 was good for most things, shown here by the equal weighted indexes. The NASDAQ 100, your big winner of last year, wasn't participating at that time. Europe was. The rest of the world was. These equal weight sectors were.
We know that this is obvious. It's because tech is so much larger, and in particular, 7 stocks are so much larger than everything else. Isn't Apple worth more than like France, like the French stock market? Like this is not new. It's not rocket science why people are sort of mesmerized by whatever tech does or doesn't do. Right?
I also say, I don't know, but JC doesn't like this take, but they're the most owned stocks. They're the most popular stocks, right?
Sure.
They're the ones that people want to read about. They're the ones that
in America.
I would argue in a lot of places.
Yeah, all right.
If you're going to tell me that people in other developed countries around the world aren't buying Apple stock, I'm going to say bullshit.
Well, that's their international exposure, right? You traveled around Asia. How much home country bias do you see out there?
Listen, talk to people in Singapore.
For the record, okay, you make a good point.
All
different countries act in different ways. That is also very fair. Yes.
If you live in Singapore, you're buying U.S. stocks.
Yes.
First.
Otherwise, you're just buying banks and marine shippers.
Yeah, I mean, if you're in Malaysia, they own more crude palm oil.
Right.
So
how's your crude palm oil exposure?
0.
Non-existent. I wouldn't even know how to buy it.
No, CPO. When most people log into their Fidelity or their Schwab and they open up their brokerage account, they're seeing red or green, a lot of times based on what these Mag 7 stocks are doing, right? So this is what drives people's emotions, drives the sentiment, because these are the things that are owned by most people. So that's why they get talked about so much. That's why they're all over Twitter. It's why they're on the cover of the Wall Street Journal.
Yeah, it's like,
why do they have to lie to people?
JC, it's like you're talking about the Knick game, and who did you mention off the bat? They're 2 stars, right? Jalen Brunson and Randall, idiot, right? I didn't hear you talk about Isaiah Hartenstein, right? The role players.
Only because I can't pronounce it.
Right. Okay. So the stars are what grab the headlines. Tech is a star. It is the star.
Brunson's such a stud. Randall is a hot piece of garbage.
Okay,
He gets worse every year.
They're the stars. Tech is the stars. I'm not sure why you're so angry about it. It is what it is.
First of all, I'm not angry. And excuse my enthusiasm here. Don't misconstrue that.
Fine.
I am not upset about it. I love it, right? Because it increases the arbitrage between the informed and the misinformed, right? Which is huge already. So when you have journalists lying to their audience on a daily basis, it just increases that arb. So I'm all for it.
Okay.
Lie away, my friends. Lie away. Is that what they teach in journalism school? Like lying to your audience 101?
No, they do not.
Bullshitting, bullshitters, 201. Like, is that, or no?
Did you go to school for journalism, Spencer?
I did indeed. I learned some things that were useful, some things that were not.
How to sensationalize,
No. I learned how to. Oh my gosh! I learned how to fit like typeface headlines for a newspaper column.
Yeah,
like the width of a letter. Stupid stuff.
No, but writing is really important, and
writing is critically important, of course. Yeah.
Everyone should take writing classes in school. Liberal arts education gets that right, I think, for the most part.
Or you could just start writing, which I would argue is way more helpful.
That too.
Listen, in my business writing class, I learned stuff that I probably use today more than anything.
I would kill to read some of that. I'm sure it was really high quality content.
Listen, we talk about then smart brevity. People are writing books about it, very popular books about, being clear and concise. I'll never forget my teacher teaching me, and all the guys on the analyst team know what I'm about to say, the 3 C's when you're writing: clear, concise, complete. It relates to what we do every day. I learned that in college.
If my 3rd grade teacher knew how much money I've made by writing, I think she would have a heart attack. I remember Miss Pedraza. What a bitch. She gave me a C. She gave me a C in 3rd grade. I had all A's and B's, and she gave me a C. My parents flipped out. Look at me now. Look at me now, huh?
Is something in your coffee this morning? Oh my goodness gracious!
Fantastic. She's a terrible person.
Fantastic stuff. Hey, I got a Strazza spotlight. Should we do it?
Yes.
You want to do it now?
Yeah, please. We have a few minutes. Hit it.
Yeah, we got about 5 minutes to. No, let's take like 10 minutes to our guest. All right, Strazza spotlight. Strazza, I got to look for your bumper. There it is.
I really like that, by the way.
It's good.
I really like that a lot.
Let's talk about semiconductors. How did semiconductors do last week?
Up again.
So it depends. Equal weight, XSD, not so good. SMH, up a tiny bit. Intel had a lot to do with the index weakness last week. Intel, worst week in a long time, was down almost 10%. Big down day on the heels of earnings Friday. You heard all about it. I have the networks on here throughout the day, most of the time. A lot of Intel talk. And I'm sitting there thinking to myself, wow, nobody's talking about Taiwan Semi. I didn't hear anything about ASML. A lot of people don't know ASML. Taiwan Semi, I think, is a pretty popular name. The biggest.
I think ASML, the Dutch master, has, it's getting around. I mean, it's a big company. I mean, how big is that?
25th largest company in the world.
Is it 500?
No, but it's getting there. Let's see.
It's big.
ASML. I'm seeing 340.
350. That's huge.
Taiwan Semi, 600. What do you think Intel is? The one that they couldn't stop talking about.
300, 250?
200. So
184 now.
So 3 Intels get you a Taiwan Semi. You get what I'm saying here?
Taiwan Semi at 600. 3 Intels won't even get you a Taiwan Semi.
Throw up the gap and go chart. Let's talk about these names. Taiwan Semi and ASML, critically important to the semiconductor industry, critically important to the global economy. If either one of these companies closed their doors, shut operations for a single day, you would hear about it. The supply chain would fall apart. It would be a disaster. ASML, on one hand, does a lot of the equipment, services around these semiconductor companies, right? They're clients of these other semiconductors that we come on here and talk about all the time. They supply them with the things that they need to supply the chips. Taiwan Semi makes a lot of the chips for other semiconductor companies, right? So they're all interrelated here. The bottom line is these two companies, critically important. They're bellwethers, right? They're so important. They're indexes in and of themselves. So throw up the breakaway gap charts. Let's talk about what happened here, why I'm kind of harping on these two names so much. No, the Taiwan Semi ASML chart. I just dropped in the chat earlier. There we go. Okay. Downtrends off the 2022 highs. Sideways trends, trend reversals, rounding bottom patterns, whatever. Then we've been consolidating since Q2, both of these names shown on the right-hand side of this chart. On the heels of earnings over the past 2 weeks, ASML was last week, Taiwan Semi was late the week before. They gapped above their 2023 highs, never looked back, gap and go, whatever you want to call it. For me, to gap above a key polarity zone like that, in a situation where it looks like a base or a reversal is in, but still kind of want confirmation, that's as good of confirmation as you're going to get. So I look at these two charts. I look at the price action over the last 2 weeks. I understand that earnings was the catalyst for this price action. So for fundamental people, maybe that's important. This is confirmed now. The path of least resistance is now higher for these two critically important names, two giant semiconductor names. Sure, Intel had a bad day, gave a lot back. It's been up a ton since last year. These two names breaking out, confirming that the primary trends are now higher is huge. It's huge for the indexes. It's huge for global indexes. This is a big win for the bulls. So turn off the news if all they're doing is talking about Intel. This is the story in the semiconductor space right now.
International rotation.
Good. About time. Let's go.
What about some of these Israeli semis?
Wouldn't it make sense, JC, if and when we get that international rotation, that the two bellwethers of tech internationally lead it?
Well,
Kick it off like this? No?
Do you think that this is more of a function of this particular group, this sector so strong, and less a function of international rotation?
Yes, but they've been laggards within the group, right? Semis.
They also got hit really hard.
Yeah. So laggards within semis, so a catch-up trade in semis, but probably leaders in a way internationally.
Well, hard not to be.
Right. Which both make sense. So yeah, a little bit of both maybe. It would be great if international stocks could take on a leadership role. So you
make anything from those inflows into
China?
China and EM in general?
I don't know. You know me on inflows.
I know. You're like me. I can't figure it out.
It stands out. It's a huge number. I'm talking specifically about the China one. A lot of talk about that this weekend. We should get Todd Sohn on and ask him about it. Again, here's what I know about that data point. Definitely not bearish. Am I going to go run out and buy more semiconductors? I already own a ton. But would I on something like that? No. If it had to be something, it's bullish.
Who's excited about new monthly candles in a few days?
You got 3 more days.
Wednesday night monthly candles. Just me, candlesticks, and a glass of Bordeaux.
You're gonna do some Twitter Spaces.
Maybe I might light a candle. You're gonna
go
put some incense, light some incense. It's a spiritual. It's very spiritual for me.
Do you have candles around as you look at your candles?
I don't, but I think I might start just to relax me. These journalists get me all riled up in the morning,
Yeah.
Take that, Miss Pedraza.
What wine puts you in the best mood to go on Twitter Spaces and argue with fundamental analysts? What's the wine for that? Or is it whiskey? It's probably whiskey.
No, I don't drink spirits at home.
No?
Ever.
Strange.
I haven't in a long, long time since I lived in the city. Huh. So, what? When did I leave the city? In 15? Summer 15?
Do you think that there was any causation there with you moving basically to a giant vineyard in California?
Yes.
Okay. Got it. All right. Sure.
Mm-hmm.
Yes. And it's healthier. It's What am I doing? I got 3 kids. What am I drinking whiskey, at home? It's too much. I don't like how it makes me feel, but I can have a couple of glasses of wine and it's fine,
All right, let's talk about one stock before our guest. Let's talk about SoFi. What the heck? It's kind of the only notable earnings report on a Monday morning. So let's do that right now.
16% ain't nothing.
SoFi, congrats on your first profitable quarter. Adjusted EPS, actually, of 2 cents per share, up from a 5-cent loss a year ago. Adjusted sales, $594 million versus a $571 million estimate. Let's see, they expect to generate around $555 million in revenue in the current quarter. Want to see about new members. What was it? 13 million? Did I get that right? I saw a new member number about an hour ago. But anyway, a good quarter for SoFi. I mean, the stock is up 15% here this morning. So good quarter. Like I said, first profitable quarter on an EPS basis, and they're growing. They're growing into it.
The fundamental folks really like this one.
They do. Well, because they're growing into it.
I find it very interesting.
It being their valuation, but yes.
Valuation. Above 850, you own this. It's messy, fine. You get confirmation above 10 and change, but triple back to those old highs? I don't know. The reversal's in. Primary trend is higher for above 850 where those red arrows are. Mess last year. Want to see it get through that mess, 10, 11 bucks, confirmation. No? JC, you like it?
If you're going chart by chart and you are figuring out how to allocate new money and put to work, is this what you're going to be buying? 16%.
It's a good question.
886. Like, that's the question I want to ask myself.
Why?
886.
Why? Because it's messy? Why are you hating?
No, I'm not hating. I'm saying I always ask myself that question. Right? And above 886, that gap is a little nasty there, right around 9 and change. But I don't hate it. So like when you ask yourself, okay, we got new money to put to work. We took some profits last week. We got stopped out of this last week, whatever, right? We're all in similar boats. We got money to put to work. Is this where it's going to be?
You know how I answer that question.
My answer is not yet. I don't hate it. I think there's better opportunities. And I think this could be one. I'm going to be a little patient with it. Be a little patient. That gap fill is a little nasty.
I agree. And I know that we don't have the relative trend right now, but also talked about this last week. How do I kind of measure that or make that determination? Because I think that's a problem right now, right? There's more and more opportunities. Breadth is expanding. A lot of good looking charts, a lot of stuff you could buy. You have to have a way to gauge which one do I buy. You don't want to buy them all. You can't buy them all, right? Not enough time. So which ones? I think the easy, rule of thumb there is, okay, the trend reversal is in on absolute terms, but is this going to be a leader? Am I going to outperform in this name? How do you measure that? Look at something like SoFi relative to a benchmark. I think the S&P 500 is the right benchmark most of the time. And the base is not quite completed yet. The reversal pattern is not quite completed yet on relative terms. So the ones that I'm getting into, the base breakouts, the reversal patterns that I want to get into are the ones that have also reversed trend relative to their benchmark, because that indicates or suggests to me I can count on this stock outperforming, giving me that alpha that I want.
That's good luck. A couple of things I want to clarify.
Go up slide one, slide one, Spencer.
7.5 million members now is what they have. They added about 500,000 new members last quarter. And also, I don't really know how you quantify this, but SoFi is such a loved darling stock on social media. I wonder if that just makes it harder, like more of an uphill battle.
Yeah, I think so.
Yeah.
Why is it? Why do you say that it's loved on social media?
Because
it's a popular one. It's a hot one.
This is a retail darling stock. They love it.
Is it? Why?
Yes.
Yeah.
I don't know. I really don't know. I genuinely don't. But aren't
you a customer?
I am. I am a member. Yes. I'm not a shareholder, but I have.
Are you happy? Are you happy with that decision?
I am. I would definitely advocate if you're going to go to a branchless bank or a digital bank like I did, I definitely would recommend having a second bank that does have physical branches, because you never know when you need a bank, to go into a bank. But other than that, I like it. Yeah.
Was this a SPAC?
Yes.
And you're okay with that?
Like being a member? Sure.
No, well, that's why you're not a shareholder?
Oh, I was. And
how'd that work out?
Not great, Bob.
Right. Is that one of the reasons why you hate SPACs?
No. Well, no. It's not SoFi's fault problem, right? I guess it is maybe now, but
so Anthony Noto runs this company. He's a former CFO of Twitter. Really smart, respected guy.
Really?
Silicon Valley.
Interesting.
Yeah. A lot of insight.
I think it's a great product. I mean, I like it. Yeah, sure. It's very easy to use. I really, they use like Plaid. You can pipe in all your accounts into SoFi and just kind of keep track of everything. And
Plaid is so janky.
I don't know.
It's so janky, dude.
I don't know.
It's janky. Plaid is not good.
A lot of.
It works for me. I don't know what to say. Works for me.
You're not as software developers.
Okay, fine.
A lot of China talk out here in the chat, huh?
Yeah, Evergrande liquidating, so that's always fun.
Looks like there's nothing going on in China this morning.
Well, besides Evergrande liquidating, but we don't really care about that.
They went under like 2 years ago.
Can you explain to us mere mortals what an Evergrande is?
Yeah, it's like the third largest property developer in China or something.
Real estate.
Sorry, was. Yeah.
All right. But everybody knew about this, right?
Yeah.
Which is why the market's not reacting.
Right. Yeah. That's the black swan that everybody knows about.
They've been in like China's version of like a receivership for like 2 years. So I don't even know. Hey, let's bring on our guest. All right, new guest on the show. New guest today, David Rath, partner and CIO of Continuum Wealth Advisors, and he brought some charts, which we appreciate. So we'll bring him on.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, David, what's up?
Hey, good morning. Thanks for having me, guys.
Good morning to you.
Thanks for coming on.
David, this welcome to the show. Appreciate you being here. A man of my own heart. I look at the charts you sent in. The first one is credit spreads. I'm like, oh, somebody's paying attention. Good for you.
Yeah, and I prefer the duration matched, or at least getting as close as possible to that. So
thank you. We appreciate that duration match.
Of course,
understated.
So as you can see, we did retest an important level a few weeks ago, and we've seen a rebound and now new highs going back to 2022 in that relationship. So if we're looking for more evidence on a bullish trend in equities, I think this is a good spot to bolster that thesis.
Talk about why you're fixing the durations and what that even means, because I think it's so important.
Good question.
On that.
So if we compare it to something like a TLT, it's going to be influenced a lot more by interest rate risk, and so less from a credit spread perspective and more from interest rates moving around at different parts of the curve. So I also look at that versus a TLT, but it's I like this one in particular because the durations are close.
Yep. And anytime you want to compare two instruments in the bond market, you want to be very aware of the duration of the underlyings in that fund and match them. Otherwise, you might get a different picture than what you're actually looking for.
Yeah, absolutely. And so I do see that often where people will compare it to like a longer dated treasury ETF. And of course, you can pull actual spreads from different data sources. But if you're looking at just the tradable products, this is the one that I like to default to.
Otherwise, you're going to be seeing credit risk in the chart more than what you're trying to measure.
So I would say that actually that more interest rate risk.
Interest rate risk.
Credit.
Yeah. All right, yeah. So this is HYG IEI, so it's high yield versus short-term treasuries.
And David, can I ask you, do you think this is more coincident? You think it's more leading? Do you think it sort of sets the stage for the environment? How exactly? This is great in theory, right? but now in practice, like let's say this was falling apart, for example, right? Or right now it's doing the opposite. Like, how do you think about that?
I think it's a combination of coincident and slightly leading, because usually the bond market is the first place to show signs of stress. And so if this were to be falling apart and equities were treading water, I would say that that would be a bad indication for the short-term prospects in the market. So it's just another piece of the puzzle. As you know, we like to just look at the weight of the evidence. And if we're looking at stocks at all-time highs and credit spreads being pretty tame, I think that that is a good sign overall.
What about like European sovereign spreads, right? You're seeing literally the exact same thing. Do you go there to confirm, and how do you think about that?
To be honest, I don't really go there. I've been much more focused on the U.S. lately. The European sovereign spreads. I mean, if you're looking at just the equity indices abroad, while they're falling behind on a relative standpoint, the weight of the evidence, as we've talked about, is that the markets overseas are doing well as well, just maybe not in relation to the U.S.
Okay. When you're seeing these spreads blowing out, which they're doing the exact opposite, right? How do you start thinking things differently? Is it more of like a landscape thing and making different types of decisions, right? Like, does this sort of set the stage kind of for the environment, and then you go from there?
Yeah, absolutely. And as we've talked about, you don't want to make a decision on one particular data point. And especially for what I do and in my job as a CIO for an RIA, we don't want to be making knee-jerk reactions to something that could have a different explanation than just what we're seeing in the charts, right? So we try to take everything, put it together, and make a decision based off of that. But also, at the end of the day, we still want to be involved in what's working at that time and avoid what's not working. So while that could be a warning signal if we started to see signs of stress in the bond market, I don't want to go to cash in some of our equity positions just because of that. I want to see confirmation in the price.
It's a nice heads up.
Yeah, exactly.
You mentioned things that are not working. I saw you brought a chart here of base metals pushing down against new multi-year lows, while gold is pushing up against new all-time highs. How are you thinking about that?
Yeah, so if we start with the gold chart here, I think everybody in the technical world is aware of where gold sits in the multi-year pattern that is close to completing, which is that cup and handle. I didn't even draw it on there just because I think everybody knows it's there. But the reason why I wanted to highlight gold here is while it is close to breaking to all-time highs on an absolute price basis, the relative chart right there, it's near all-time lows from the debut of the ETF. Now, the optimist in me would say that if we're to break to all-time highs and we see a rebound off those relative lows, that could be a really nice tailwind for gold and kind of come to fruition what all those gold bugs have been waiting for all those years. And so I'm being patient with regards to gold, just because even if you look at a daily chart and the relative strength there, you're not seeing any sort of confirmation from a relative standpoint. And so I would want to see that turn up on a relative standpoint and also see that confirmation of a breakout to all-time highs.
Hold on, David. Does being bullish gold make you an optimist? Is that what you said?
An optimist on the gold sector in particular.
Are you a gold bug deep down inside somewhere?
I am definitely not a gold bug. I will be a gold bug if it's working. Yes.
Thank you. Spoken like a true technician. Well, I grew up a gold bug, and you and I are about the same age. So in the early first decade of my career, being a gold bug was cool. Remember, Dave?
Yeah, and I remember those hyperinflationistas in 2010, 2011, and as it was the classic bubble that if you were involved in it, great, but if you didn't have a way to get out of it, then you've been stuck holding on to something that has lost its relative value all the way back down to where the ETF debuted.
How about those silver surfers? Oof.
Yeah, and silver, you want to see some confirmation there as if you are looking to be bullish on precious metals, you want to see silver start to participate. You want to see gold miners start to participate. That chart is a hot mess for me. And so there's a lot of things that are working against gold at the moment that I would say I would want to see them improve before allocating any sort of money to it.
You see what he said? Hot mess? That is a technical term. Right, Dave?
Yeah.
We've never met before. We both use the same, nomenclature.
Well, I do follow you on Twitter, so there's a possibility that you've incepted me into some of these.
There's some influence there.
Yeah.
Okay, fair enough. Let's take a step back for a second. So you're approaching the market from the perspective of a CIO of an RIA, correct? Mm-hmm. So Chief Investment Officer of a registered investment advisory, where you're managing client assets, right?
Yep.
Where are you guys based?
Saratoga Springs, New York.
Can you tell Strazza that he needs to go in August?
Yeah, July or August, that's the track season. That's what everybody knows us for. It is a great time in the city. It's still, I would put Saratoga up against any other smallish city in the country. It's great, especially during that time of year.
David,
it's fantastic.
I'll be up your neck of the woods this summer.
All right, well, hit me up.
All right.
I probably won't be, but I'll be rooting for all of you. I love it up there. It is really fantastic. And then, how much in assets are you guys managing?
So we are north of 200 million right now. We work with about 300 households. Majority of them are retirees. And so I also have to take that into account when I'm constructing a portfolio, managing for risk, making sure that their distribution strategies are on point. So there's a lot more that goes into it other than just allocating capital to what's working at that moment based on some technicals. I just did a webinar a few weeks ago for the CMT Association talking about marrying fundamental and technical analysis as part of my process. As you can see, I got both of them up on the wall. But
you're just like studying and taking a lot of tests. It seems like.
I'm done. I'm done with the tests.
Talk more about these distributions. What does that mean for retired people? You're talking about RMDs or?
So RMDs, but also people that are switching from their accumulation stage.
What is that?
It's a required minimum distribution where the government needs to get paid their taxes.
You'll get there one day, JC.
You don't have to worry about it.
Yeah. All right, good. That's a new one for me. RMD. I don't know. I never heard of that before.
Yeah. So there's required minimum distributions at a certain age, but most people, as they switch from the accumulation stage of their career to living off the money that they've saved, they need certain strategies in place that help them replace that paycheck, do so in a tax efficient manner. We do all that. I handle it on the back end, making sure that people don't run out of the money that they've saved, and controlling risk from the investment standpoint, but also the operational aspect of just making sure that cash hits their account.
And there's a big, I guess, interpersonal or psychology, thing there too, that you probably have to navigate, because you talk about moving from the accumulation phase of your investing life cycle to the distribution phase. I know, having older family members helping with this stuff, it gets really weird for people when that number starts going down and they're taking out, right? So I'm sure you have these conversations a lot. What do you tell people? Somebody who might be worried that they don't have enough, or it can get, a little stressful for some people, I think.
It's a huge point of stress. And some people will end up becoming misers in their retirement years because they don't want to run out of money. Right. So one of the things that we help people with is making sure that their projections are on track. Of course, those need to be adjusted on a regular basis just because the future is inherently unknowable. And so if you run a projection on day one of retirement and think that you're set, there's a lot of things that can get thrown your way. So we make sure that people understand how much they have to say that they have saved versus how much they're going to need to distribute, and adjust that periodically. But there is a psychological aspect of it where people are afraid to start drawing on that money because they don't want to run out. They don't want to think about eating Cheerios for the rest of their life in their 80s. So my job is much more than just the financial markets. It is a lot of psychology and the psychology of money.
Yeah.
Okay. So to be clear, RMD, not a shit coin. But But you did bring a chart of Ethereum BTC ratio.
Ooh.
Woo! Coming from the RIA space, bring it on the crypto. Very curious on your overall thoughts on the space, how you think about that for your customers, avoiding eating Cheerios in their 80s, right? How does this fit into all that?
Yeah, so we don't have a ton because we are mostly retirees that we work with. We don't have a ton of people who are interested in crypto at the moment, and I don't think that will likely change in the next few years. I still keep track of the space just because it is what I do, and I do have some of these coins myself.
I was gonna say for the A account.
Yeah. So this is something that I like to track in regards similar to like the silver gold ratio. And if we look at the two biggest components of the crypto marketplace, if we're seeing Ethereum outperform Bitcoin on a relative basis, to me, that means that there is more willingness of market participants to start taking on some risk in the coins in general. And so if we're looking at a bullish indicator for the crypto space, I would want to see this break above that trend line. So we've already seen 4 touches of the trend line. It got soundly rejected at that last attempt. And so if we're looking for a really bullish development outside of just the ETF that was very well publicized, I would want to see that ratio start to improve, break above that trend line, and establish a new uptrend.
David, have you always been in the RIA space throughout your career?
I started in the broker dealer model, and that's a story for another day. I have a good when I started, I was at a broker dealer for an advisory team there, and it was at Northwestern Mutual. So it wasn't the traditional Northwestern Mutual where I was out selling insurance. We were an advisory team. We mostly managed assets, but it was under the broker dealer model. And the interesting story was I started there in 2012. And at that time, there was a mandate that came down from the home office that every portfolio had to have at least 5% in commodities because commodities added to the risk-adjusted return based on the recent research.
Wow.
And so they essentially top-ticked the commodity market, and we were forced to continue to rebalance into commodities throughout my entire time frame there. And every time you had to convince clients why you were still holding this asset class. And so in the independent world, it's much better for me because I can construct a portfolio however I see fit. Yeah. And I'm not beholden to any sort of mandates from the top.
That is some sentiment data, though. Do you know anybody who still works there?
I don't. No. Yeah, I'm interested to know if they kept that on.
I didn't even know they still existed.
Yeah.
That's a great story and a great lesson and great perspective, by the way, David. I appreciate that. I'm not surprised by that at all. Steve, I can't imagine he was surprised by that.
It's great.
But a lot of other people that don't really know those conflicts of interest and how those things work. I mean, it's important to know those things for outsiders, no?
Yeah, and you have to know the level of freedom that the person who is building your investment portfolio, what they have, because again, we had to explain it as, hey, the home office is telling us that you need 5% in commodities because we point to this academic research that says, it adds to the risk-adjusted returns. And
right. A little off topic here. My understanding is you're a black belt in jiu-jitsu?
Shit. Yeah. Second degree black belt in jiu-jitsu.
Remind me not to mess with this guy.
What does second degree mean?
It just means that there's extra stripes on my belt. So once you get your black belt, usually every 3 years, you get another promotion to some schools don't even do them. Some it's just black belt or nothing or whatever color that you are. But yeah, I just got my second degree a few months ago. I've been training for over 17 years at this point.
Wow.
What is it? I don't know any black belts. What does it feel like just walking down the street, just knowing that you could just kick anybody's ass no matter what if anybody messes with you? Like, what does that confidence feel like? Because I don't have that.
It's pretty good. Yeah, like I've never been in a fight outside of a cage, but there's a definite feeling of confidence that you do carry. But also you want to be aware that people can bring more than their fists to a fight. So you don't want to engage with anybody that you don't know how the outcome's going to be. So I would much rather walk away from a situation than engage in anything.
And if anybody comes to you, like, do you warn them? Be like, my advice to you is just go away. That's my advice.
No, I usually avoid the situations in the entirety. So if somebody came, backed me into a corner, I would have to react. But I usually avoid those situations.
But it's worse that way because when you're a black belt or something like that, or a box, you got to be you can't punch somebody in the face, kill somebody.
Are your hands and feet considered weapons, like by the law, or not?
I don't know. I think that's an urban legend. I don't think that you really have to register your hands. I never did when I got my black belt, but yeah, I've never heard of anybody actually having to do that. I think it's more of an urban legend.
One hole in our chat says gi or no gi. I don't know what I'm saying to you right now, but
I'm no gi mostly. I was a wrestler by trade coming up, so I prefer. So a gi is just like the kimono, like that you wear.
Okay.
The gi is good for grabbing onto and choking. I prefer much more of a freestyle, like open-ended type of engagement.
Okay.
God bless. You are such a badass, dude.
Oh man.
CFA, CMT, second degree black belt.
Yeah.
You got any other hidden talents over there?
I speak a little Portuguese on the side, so that's another hidden talent of mine.
Cool. How are you on the tracks? You just go in there and crush it and just print money, or
on the where?
On the tracks, the horse
races?
Oh no, I usually the most success that I ever have at the track is when I pick something by a name that I like, if it's related to me or my family. I could study the sheets, but I'm not much of a horse player.
Do you go like for fun when it's in season?
Yeah, usually like 2 or 3 times per year. I got 2 little kids now. We take them up, see the horses come in through the paddock. So it's nice, but it's not something that I'm there every day. I could tell you maybe a few of the jockeys, but I'm not deep into the culture like some people are up here.
And in the locals really are, and they spend like days there, like observing, and yeah.
For sure. Yeah. It's an entire culture up here. And there are people who probably go every single day. They know all the jockeys, all the trainers, all the owners. They go to the auctions. It's a whole lifestyle.
Wow. That's cool. I know nothing about that stuff, so I'm fascinated by all that stuff.
All right. David Rath, guys, his Twitter handle is on the screen, is also in the description. Great follow on Twitter, DJ Rath. David, thanks for coming on today. And would love to have you back on again.
Thanks for having me, guys. Yeah,
appreciate it. That was cool.
Always love getting new guests on the show. We have a couple of new guests this week, actually.
Very talented, this guy.
He's a true Renaissance man.
Seriously. Second degree black belt. Wow. Whew. CMT and CFA.
Yeah. Okay, let's you want to go over some headlines? You want to do hot
sounds to me like this gentleman, David Rath, has a lot of discipline, you know?
Yes.
Which is a great skill to have in this business.
Where should we go next? Hot corner, headlines. There's a couple headlines. We can do market's not quite open yet, so can't do an update. We can do chart report. Where do you guys want to go?
Yeah, let's go to the hot corner. What went on?
All right. Nothing? Quiet? I saw
Well, it's a Friday. Quiet period.
Put it up if you want. We could talk about it.
Yeah.
Hot corner. So hot right now.
All right. Anything good?
Up top. Throw up the table. Yeah. So first one, Compass Diversified. Elias Sabo, $2 million, series of Form 4s. That's a material buy. That one stands out. We also had Rush Street Interactive, another one of these gambling companies. What do they own, Spencer's Rush Street?
What does Rush Street own?
Isn't it one of the online like gaming or gambling apps? I think so.
I don't know.
So anyway, Divisadero, I don't know, JC, Street Capital Management LP. So a fund filing a passive stake. So this is a brand new investment. This is an original Form 13 filing, about 6%.
How do you know? How do you know that?
Because it says original filing. We look for that. We check, right? So if you're just getting the note every day and reading the table, the way you know if it's a new 13 or not, on the old 13s, we're updating their investment interest. Like you see here in BlackBerry, we're showing you with the new filing, they increase their position this much. In the case of BlackBerry, it's very small. And then when it's a new filing, we'll put original filing. So you'll see it in the comment box there. But
great ticker symbol, by the way.
and then if you're actually looking through the forms yourself, the way you know an original filing is just a Form 13. So it'll just be Form 13D, Form 13G. Any subsequent follow-up filing will literally say on it and on the SEC website, Form 13D/A, amended. Form 13G/A.
Look at the RSI.
Of RSI.
No, slide 3. New slide 3. So this is not the relative strength index. This is Rush Street Interactive.
It's a sick base, though. 1.2 billion. What do they do? You didn't check? I'll check.
Gambling.
No, I did.
RSI gambling.
RSI is it's like they have like online gambling games, and they're also like B2B. They do like software for online gambling.
They make the are these the ones that these are the guys
They
that
own
machines?
They own betrivers.com.
Oh, I did not know that. All right.
Oh wow. Yeah, dude, they make all the games. All right.
Yeah,
They
make a
make
lot
the
of
games.
yeah.
If you sit at a bar at a casino and play
Yeah.
those stupid that's these guys. You know what
Yep.
I'm talking about?
Yep.
On the
It's a
screens.
gambling company based out of Chicago. So
No, but JC, you sit at the bar at the casino, they have all the little games. You
I don't
play with
go
your
to
finger.
casinos.
No. You sit at the bar at an airport, and they have like the little kiosk there.
Yeah, they got the
And-
little
yeah.
screens. They make like the gambling games, like actual like games on the screen.
Mhm.
It's a tax on the stupid. I'm
Yep.
all for it.
You're over here asking him if he ever goes to the horse racing track. And this is a tax on the stupid?
Yeah, because that's really fun.
Oh, okay. Oh,
Like,
got
you
it.
don't have to gamble. You could just go drink and hang out, wear
Got
silly hats. You know what I mean? Yeah, place a couple of bets on the horse. You know
Anyway,
you're going to lose it.
The-
You're
the
not
R-
gambling. You're
the
having a good
RSI
time.
The RSI chart.
Not bad, Strazza.
RSI is overbought for RSI.
You just had to. You had to do it.
I gave you a chance. I thought
Too easy. Too easy. Too easy. What about the other one? What about the Cody? Go to that one. It's not that different.
So this is a conglomerate.
Industrial stock. Because they didn't know where else to put it.
It's yeah, right. Probably machinery, whatever. Compass diversified. Hey, sweet base. It's a great base. This one's clean.
Based out of Westport, Connecticut.
How you doing? Shout out Westport. Love me. some
Shout out.
Westport, Connecticut.
Shout
Great,
out Westport.
great place. JC went to college right down the street. How lovely. Also,
Gave me a diploma and everything.
Also, JC, I know we didn't have much time marking up this chart, but if you fib that baby out, 38% retracement. How you doing?
Fib that baby. Fib that baby out.
Right. So what I'm saying is if you look right here at this base, you got these pivot highs that we're just now look to be getting through. It also lines up really nicely with the 38% retracement of the 21-22 drawdown.
Yeah. All right, and they're off.
Hey, speaking of gambling and all that, one of the headlines I was going to talk about this morning, I think it was last week, JC, you asked about Flutter Entertainment or you asked about FanDuel, right? And who they're owned by. They're owned by Flutter.
Yep.
Flutter is listing on the NYSE today, like right now, actually. So
Cool.
See how that works? See how that works?
what? JC asks about it and they list? Is that?
No.
Oh, they're listing on the NYSE?
Yeah, like right now.
DraftKings has been all over the news. Analyst upgrade after analyst upgrade. Kramer doing a spotlight on it. I've never seen this stock get talked about so much the past few weeks. And you don't think if you're their main competitor sitting there, you're licking your chops, you want a piece of that?
Mhm.
They should be listed on a NYSE. The fact that JC's asking, what is this company? How can I buy it? Yeah, they should have. They
Yeah.
should be listed on the NYSE.
I'm not the only
All
one.
right. FLUT, FLUT. FLUT is the ticker.
I'm not
I don't know
interested.
if-
I'll just come right out and say that. I'm not interested. Do you know why? This is a
Too much
winner
DraftKings.
takes all business.
Yeah, yeah, and it's a true zero sum game. Oh no, that's not true because Lots of people gamble on more than one platform. I mean,
What's the name of the company? What's the name of the company? Fluffer?
Flutter.
Because
Flutter?
but I think that right now is because of the state by state differences. I use a certain app because it's the only one I could use, right? If I could use anything, I would use the best one. In industries like this, there tends to be a big winner. And I'm not saying they're going to be the only company. You're right, Spencer. Others will be around, but there will be a big winner. And when we talk about sports betting in the future, there will be some sort of verb for it, right? Where we're all talking about taking an Uber or putting on a DraftKings, okay? So I think you want to be careful picking second best in this kind of a space.
Maybe.
Pick the best.
I lost literally. I went 0 for 6 yesterday in my bets. It was remarkable.
Weren't there only 2 games?
Yes.
Well, there's your first problem.
Yeah. Right. Okay. So
Would you bet on the
okay,
coin
so-
toss? Like, what are you betting on?
No. I bet on some touchdown stuff. Anyway, so FanDuel listing in New York today. The Amazon iRobot merger or deal that's dead in the water. Amazon announced they're going to kill that right today. So this was in the, if you follow the story, iRobot was not going to, this was not going to get through. The EU was going to block it. So iRobot shares have been dropping for a few weeks now. So iRobot's going to lay off 31% of their staff. And that deal is no more. And those are kind of the 2 headlines. I mean, I guess if you care about a high ranking member of Goldman Sachs leaving, their head of global banking and markets is leaving after 30 years at the company, Jim Esposito. But other than that, pretty quiet morning. So
Yeah, and just address this. Stock market Mike, FanDuel user interface better than DraftKings. You're not the first person to tell me that. I'm just talking about the numbers, though. The trend in users and user growth between the two, very different. If you go check out the numbers, DraftKings passed them out last year. It doesn't look like they're looking at.
Well, you know what's interesting is it's clearly a 2-horse race because MGM and Caesars have just fallen. I used to use MGM too, and it's just fallen off dramatically.
You don't worry as a Disney shareholder how bad this ESPN bets thing is?
How bad it is?
How
Bad
big of
in
how
what
big
way?
It can't be big at all. Why are they even doing it though? Like you just said, they're not even a part of the conversation. ESPN
Well,
bets.
I mean, it's been around for like 2 months, so
Yeah, they're too late, right? We call that
I
first
don't
mover
know.
advantage. Hey, do you remember when we were in college, Spencer? There were 2. Remember what they were? This is called the first
Well-
mover advantage. You'll learn about it in
well,
business school.
Yeah, it was it was daily fantasy sports every goddamn minute of your life. DraftKings and FanDuel, DraftKings and FanDuel.
They were
You
the
guys
only
are a lot
two.
younger than me. We used to use Bodog. Remember Bodog?
Yeah, I remember
No.
Bodog too. And we had some sketchy websites that were like based in the Caymans and Bermuda that people used to. But as this became a thing, and it started with fantasy football, right? Because that was legal. Everything else was still black market back then. FanDuel, DraftKings, all you heard about. These companies have been around for a very long time. First mover advantage. They were the leaders then. They're the 2 leaders today.
Wait, what was that? Was that site called like Bodega or something?
Bodog.
Or is that what we're about?
Bodogs.
Okay, I do remember
They
that.
had all the
I do remember
lines. Yeah.
that. All right, I remember that now.
Ooh, how about the games last night, guys?
Yeah, heartbreaker. As someone who is,
Detroit.
on the
Yeah.
Lions bandwagon, lives in Detroit, total heartbreaker. Tough.
I
one.
really like Dan Campbell too. That would have been cool. But it was surprising because I feel like a lot of people were thinking like Ravens, Niners. That's it. They were kind of writing off the other 2 teams. Almost had almost had Lions Chiefs, which I think would have surprised a lot of people.
Well, you heard about this theory about the Super Bowl logo, right? And the colors.
No,
It's like 3 years in a row that the colors they used in the logo were also the primary colors for the 2 teams in the game. So this year the logo was like purple and red. So they thought Ravens, Niners, but
that's so stupid.
Anyway,
How about this this rumor that's going around about the Chiefs and the referees?
yeah, I know.
Why? What's going on?
People are always complaining.
Stupid things. Okay, a couple other movers. Zim integrated shipping, ZIM caught an upgrade this morning, so stock's up 10% on that. Don't see that every day. 10% move on an upgrade.
On what? What name? What name?
Yeah, what's the ticker?
Zim, ZIM.
Oh yeah, I'll tell you why. Most heavily shorted name in the market.
Oh,
Is
that'll
it?
do
Is this the one?
One of them. It's up there. Where's the table? Throw up the short table when you get it, Fonz. Yeah, 11.3%. Dude, if you zoom out on this one, I dropped in the chat a few weeks ago now. Above
Israeli
that 12,
shippers.
above that $12 level, you see how this thing absolutely shook lower, collapsed into Q4 of last year, got back above the IPO date price around 11.50, 12. Absolute ripper. Yeah, this is a squeeze. Huge squeeze going on here.
Interesting.
And
then,
so this might be a stupid question because we're always laughing how they just throw stocks into industrials when they don't know where to put them. Marine shippers, industrials, huh? Yeah, because it's transport.
What
Yeah,
else
totally. Yeah, that's a good point.
They move shit.
Yeah, they move shit.
But they use technology to move shit. So I don't know. Okay. Should we bring on Mr. Ian Cully?
Please.
Talk some FIC.
Yeah, I
Ian,
want to talk
you
about
ready?
crypto before we get out of here too. Talk about some of these failed moves.
All right, well, let's do the crypto first, and then we'll do Ian.
Good. I got 3 charts. I'll make it fast.
All right, what do you got?
Let's start with the altcoin index. Okay. From left to right, read this chart with me. Downtrend, big prolonged rounding bottom, base, textbook trend reversal, back above those 22 and 23 highs, right? Looking like the reversal is in. The rounding bottom pattern is complete. Path of least resistance is now higher. A little bit of corrective action here. You could draw a little short-term top, hooking back into the box, right? Exactly what we talked about. Exactly what the regional banking index looks like. KRE resolved the base, ran back, checked in with it, scooped higher, right? This is what we're talking about when we say, okay, primary trend appears to be or have shifted higher. Now we have a short-term pattern that looks to be a reversal. The short-term pattern looks to be resolving lower. If, God forbid, it does not resolve lower and hooks higher, look out. The next leg higher for crypto is upon us. What will some altcoins look like? Let's start with the leader, Solana. This one's going to move first. It's still leading. It's been so resilient. Did I throw in the Solana chart or no? Yeah, okay.
There it is.
A little MACD on a Monday? How you like me now? Woo,
Don't
MACD.
see that every day.
We call this a MACD.
Too soon? Too soon?
Why not? Momentum, right? I prefer PPL. MACD crossover, that would make a lot of sense as this consolidation comes to an end. If you drop an anchored volume-weighted average price from the pivot highs from December, we're right there. That's been putting a cap on these lower highs for the past month now. If and when we take out that VWAP, go higher, you already got the little shake, right? You see the shake by the oops there, shook lower, couldn't do it, breaking higher now VWAP. I think you get that confirmation. New up leg. One more. Algo. This one's just clean. Shows it really well. Algo. So if and when that environment or scenario takes place, these are the things you'll be seeing, right? That's why we're going through these. Algo. This one really failed, right? Short-term top here coming off of a new uptrend. You see the rising 200-day moving average. I've labeled that to just point out new uptrend. Ran back, checked in with the AVWAP from the cycle lows. Shook beneath them, big lower wick one day, now hooking higher. We get back above that little neckline there. This is then a failed top, and a failed top is what? A continuation pattern. Continuation patterns do what? They continue in the direction of the underlying trend. Underlying trend is higher. So these are the three of the things that I'm looking for to know that a new up leg is upon us for cryptos. You guys buying this?
I noticed how you snuck in. Let's go to the leader, Solana. You snuck that in there.
I don't need to sneak it in. Everybody knows it's the leader. You think I'm lying to you?
Oh, okay.
Well, leaders lead in healthy markets. There's nothing wrong with that.
Oh, what? Just because I own a ton of it, Spencer? Talking my book out here again?
Well, he owns it for a reason.
I own a little Solana too. I'm not hating. I'm just
let's go.
Thought it was funny.
So am I a little bit biased, looking for a new up leg for crypto?
Yes, but that's okay. That's okay.
We're all biased.
Yeah, you can talk your own book. Who else's book are you going to talk? There's worse books to talk, by the way.
Do we see it? Another thing. What'd I do here? When cryptos are moving higher, you tend to see speculative growth stocks working. ARK's got to repair this damage, get back out of this space. That's another big thing I'm watching this week. Strong finish last week for some of these stocks, but small caps not so much. IPO index I want to see these bases complete in some of these more speculative indexes.
All right, let's bring on Mr. Ian Cully.
Morning, guys.
What up, Ian?
What's happening?
Nice little
Mr.
Monday.
Cully.
Yeah.
Yeah, we haven't seen you because last week we didn't have a show on Monday, and the week before that was a holiday, so it's been a while. So, hey, new background, new office. Look at you.
Yeah, I'm still getting settled in. Still surrounded by hungry hippos and Legos and Lincoln Logs, but I'm moving my books in here.
How are those Lincoln Logs? I don't have any. Are they dope? The kids like them?
Yeah, the kids like them. They like all that stuff. Connects, Legos, whatever they
Really? Oh, so that's great that they're actually still playing. I played with all those toys too, so that's great that those toys just so calls on Mattel.
Yeah, I'm a big fan of Legos too. Yeah, so.
Yeah, me too.
Awesome.
Ian, what was your favorite part of last week? You could be honest. You don't have to be politically correct with your answer. Well, if it was the pizza, it was the pizza,
Just hanging out and like getting to having the opportunity to meet our clients.
Yeah.
Because I never get to do that. So being able to hang out and just chat and get to know them and understand, what they're interested in.
Which is different for everybody.
Yeah, which is different for everybody. Yeah, but it was fun, man. I had a great time in New York.
Good.
Your beard looks great today.
Yeah, we start growing the beard out. Man, have you guys seen the move in Natty Gas? Dropping all the way back down. Looks like it's retesting last year's lows.
Disgusting. Terrible.
Yeah.
Oof.
Oh,
Exactly.
guys, UNG with another reverse split. Oh, my.
Wow.
That's the only way the funnel survives, so they have to.
Yikes.
That's a good point.
Ian,
Yes.
is gold ever going to break out?
Yeah, eventually.
Yeah.
Eventually. I mean, I'd like to see silver outperform gold. That would be constructive. I'd like to see gold or gold mining stocks not hitting all-time lows relative to the S&P 500. That's that GDX XPY ratio.
Yeah.
There's just a lot that there's a lot of evidence lacking to support a breakout in gold right now. But at the same time, it's still hanging up there.
So
Right, it's still hanging above 2,000. It's interesting. We'll see what happens. But there's a lot needs to happen within the precious metal space before gold breaks out to new all-time highs.
talk to us, share with everybody just a little bit about the commodity thesis. You did a great job on this last week with some presentations. Kind of give everybody the elevator pitch or too long didn't read version of that.
Well, I think the main point that I just wanted to share with everyone is that I believe ultimately during this cycle, we see commodities break out and create a new range.
Yep.
Right. We see a lot of these commodities break out to new all-time highs, and then they'll create the range that they'll chop around in for the next 20 years or so.
Yep.
We're not there yet. Right. And it's what I think we it was less presentation last week than discussion. And I think through the discussion with everyone there, we realized that, rates and commodities in general really haven't pulled back that much.
Yep.
Since ripping higher. And, we could see, a deeper correction for a lot of these commodities, like we're seeing in grains, like corn and soybeans and wheat, before we get that next leg higher. So
What are some of your favorites? You got to put money to work right now.
I like cotton. I like cotton a lot. I'm watching for a breakout in coffee. I like copper. Copper looks good. And we got a bearish to bullish reversal and momentum. The question is, are we going to get a similar reversal in price? Usually we see that reversal. Yeah, this is a chart. In momentum leading up to a reversal in price. That's the old adage, momentum leads price. And this is a great example of the potential breakout here in copper. I haven't got it yet, above 395. Let's give it a little room. Say 4. We could above $4 in copper.
Yep.
I think the path of least resistance is higher. And SCCO, I dropped the chart of SCCO in the deck. I mean, trying to get back above those.
Yep, that would be a big one.
Looking base.
Totally. Nucor looks similar, right? Yeah. You really want to, kind of like when gold was looking to break out, right? We're looking at the leaders in gold, and it was Alamos, right? Where I think great information last month when it just failed at its range highs, and then gold failed a couple weeks later. When you start to see, like Ian saying, Southern Copper, it's so close. When you start seeing Southern Copper, Nucor, Steel Dynamics, all breaking out, making new highs, because they are the leaders. Just zoom out on those charts. When you see those leaders in the industrial metal space start to go, that's going to tell you it's probably a good time.
I want to know what he thinks about copper.
The little guy?
Yeah, what does he think?
Kian. What do you think about copper, buddy?
Up.
Thumbs up.
He does not care.
Dude, it reminds me of
oh.
like that journal. Remember that one guy where the kid comes in and like the babysitter's like dragging the baby out from the back.
Dude, that was an all-time live TV moment.
It was so good. It was so good.
Kian's a huge Strazza fan, by the
I'm a
way.
huge Kian fan.
At least there's one of them.
He actually makes he'll be at school and he'll make art for Strazza.
He wrote me a note.
This is for Strazza. Yeah.
What?
Awesome.
All right. That's cool.
My kids are starting to chart
His
with me.
mind is blown that anyone could like me.
I'm sure your girlfriend says the same thing.
Don't ask her.
Hey. Oh.
Hey, yo.
Rose was jealous of all the fun that we had in New York City.
She should be. Everybody should be. Can we he's back.
He's back. Hey, buddy.
That's all right.
Step up for a
Dude,
second.
Dude,
This guy's back.
hey,
Everybody's back there.
This is CNBC.
Yeah. Go ahead.
So
Go
good.
ahead. All right.
This is so good.
This
So good.
isn't CNBC.
Sorry, guys.
real.
This is day one. This is day one back in the house. I'll get this all dialed in here soon.
No, this is
It's
great.
real.
This is real life. This is real life. People don't
This
understand.
is real life.
Spencer, this is what you have coming. Strazza,
Yeah, that's what I hear.
take notes. Take notes. Come ask us questions. All right. So Ian, the big thing for me is oil.
Yes.
We talked about from a seasonality standpoint, if we're going to get a correction into like February, March, see rotation into energy during that period.
Mm-hmm.
You still think that if and when we get a correction, you'll see energy strengthen that?
I think we're already starting to see it.
Yeah.
Exxon back above, potential failed breakdown in Exxon back above 100, 102. Crude oil ripping above 74, 75. That's been our level in crude oil. Heating oil has been looking great. And what's also interesting, on a side note, I was flipping through Twitter last night, and I saw a chart highlighting that February is a seasonally weak period for the NASDAQ. So
Stocks in general.
Right. So to see, again, some rotation into energy, you get that pullback in February for the major stock indexes, which we were talking about last week. By the dip.
Yeah.
By the dip in February.
Maybe
Early
even
March.
into March.
Yeah. Early March. Yeah, absolutely.
And if you want, on that subject matter, why don't you throw up slide 28, Spencer, on that, so you could see the new highs lists declining over the last 6 weeks.
Ian, does AVWAP work in futures markets?
I've never used it.
Why?
But there's volume, so I don't see why not.
Why would it be any different?
Why would it be any different? I don't see it. Actually, I have used it a little bit. I think the question is, does it work on spot FX?
Yeah, that's tough. Why don't you
That's
talk to?
tough. That's tough.
Why don't we have Brian Shannon on with Ian at the same time
Because
and have this conversation?
Because Brian's going to say, I don't care. I don't trade that. I trade stocks. I promise you.
Fine, but let's have the conversation anyway for fun.
Okay.
AVWAP definitely works on futures. It definitely works on futures. I've never used it on FX though.
All right. I got one for you. We'll get
Look, guys. Everyone's waiting for a correction. What do you call this?
An increase in new highs.
The arrows are pointing down, Spencer.
I'm seeing an increase from like a month ago or whatever. Yeah.
Again, those arrows are red and they are pointing down. So it's the opposite of that.
Flip it upside down and then do it.
Yeah, Spencer, the new highs list is declining.
I mean, they peaked. Sure, they peaked. There was the peak there, but I still see a slight bump, right? So
the point is
the indexes have gone sideways, and beneath the surface, stocks have been correcting. Fewer and fewer stocks are making new highs over the past 4 weeks now, 5 weeks now, 6 weeks.
Despite the NASDAQ, S&P, and Dow all closing a new all-time highs on Friday.
Or that the list hasn't really been going down since that whatever that initial decline was. What, end of the year?
The list has been going down, Spencer. Are we looking at the same chart? What are you looking at?
What, start of the year? Since the start of the year, the list has not been going down.
Okay, the start of the year is irrelevant. The list has been going down since it peaked in mid-December.
Yes, that's also true.
But that's the only point I'm making.
Okay, I guess,
guys,
this is typical of a correction, Spencer.
Yeah, I'm paying for sins here, Lord.
It's a corrective wave coming off just a powerful Q4 ripper.
Corrective wave. You hear this guy, Ian?
I like it. Wave two of an impulse wave. Yeah.
All right. As soon as the Elliott wave talk comes, we got to get into recess. That's enough.
This is some correction there.
They're talking about zigzags.
Hit the bumper, Spencer. Enough of this.
All-time highs correcting.
All-time highs in the indexes, Spencer. It's a month box. I don't know if you heard.
Hold on. But before we get into recess, throw this up, Fonz. Let's knock this one out. Talking about energy futures, I wanted to show Ian that So these are ranges. You could draw ranges here from the late 22 highs through these 2023 pivot highs, right? So just big rectangles for both of them, just like we would anchor a VWAP from the August 2022 highs or the year-to-date 2023 highs on these reversal patterns and look for that to break to think, okay, maybe this base is going to start working up the right-hand side. Anchor a VWAP from these pivot highs here, running right into it, bearish engulfers out here so far today at this key zone.
Did you call them bearish engulfers?
Bear golfers.
Bear golfers.
I like that. I never heard that.
Potential bear golfers. It's still early.
Potential bear golfers. Let them dance.
I like that. I'm gonna start. When we get off this morning, I'm gonna start dropping some AV WAPs on some charts.
Go drop some WAPs.
So here's what happened. So I'm minding my own business on Saturday, out with the wife in the city, having a lovely time.
I know.
Went to a couple bars, then went to a basketball game at Madison Square Garden, and then went to dinner at Strip House. There's a lot of establishments in New York City. So we're sitting there, we're already in our entree because we have dinner early around here. Guess who sits next to me? Throw up the slide. What are the chances? And by the way, he didn't purposely choose to sit next to me. He probably would have avoided me. When it was up to him.
Oh, man.
Wow.
Literally right next to me. And this is one of those restaurants where the tables are on top of each other. So he might as well have been in my table. Right? This is Joe Weisenthal, longtime friend of ours, journalist at Bloomberg. And him and his wife literally just sitting next to me and Morgan, and we're chit-chatting, the rest of dinner. It was, what are the chances?
So it's basically like you went out to eat with Joe. It was more
pretty much. Which was hilarious. Go to the next slide so you can see why I recommend Strip House.
Ooh. Oh, man.
It's a bone-in ribeye.
Oh, my goodness.
With a slab of foie gras on top.
Yes.
Oh, God.
And then the roasted garlic, so you can spread that. So you got spread of foie gras and roasted garlic. I wanted to go Bordeaux. They convinced me to go Barolo. Honestly, I should have gone Bordeaux. You live and you learn. Bordeaux's my move. I listen to the sommelier, which I like to do. And honestly, you go left bank Bordeaux.
But why listen to another sommelier? You're a sommelier.
Because the sommeliers at restaurants know the wine list at that restaurant better than I do.
Okay.
So, like, I know about wine in theory, but he knows, or she, usually it's a he, they know more about that particular list better than I do because they work there.
Yeah, sure.
That's why. Yeah, that's why. Yep. What are the chances?
So who's Joe Weisenthal? Why don't you tell everybody?
You know Joe Weisenthal.
I know. Nobody else does.
He's journalist at Bloomberg.
He's the lead singer of a band called Light Sweet Crude.
Right. Thank you.
Yeah.
So he's a rock star.
That also.
Yeah.
That also.
Also was one of like Uber. He was like a Uber podcast bull. I think he like because he used to co-anchor Bloomberg during the day, and then he was like, nope, I'm all in on podcasts.
Yeah.
So
he used to be. I mean, he didn't used to do TV before Bloomberg. He was a Business Insider writer.
He was a journalist.
Yeah, but he was one of the good guys.
Okay.
Always was. OG.
Yeah.
He was a blogger. He's like one of the original bloggers.
Yeah. All right. I don't know if I have a good recess. Friday night in our house is always movie night. So I finally saw John Wick, which I'd never seen before. Good movie. Fun little movie.
I love Keanu Reeves.
Yeah.
Fantastic.
Great, man.
Tell me how you really feel.
Oh, dude. He's one of the best.
I also love that guy.
When I was a kid, I looked a lot like Keanu Reeves. They used to call me Ted.
No, you didn't.
Like when I was like 7, 8 years old, I had like long hair. They would call me Ted, as in Bill and Ted's.
That's funny.
My nickname was Ted for like 2 years.
That's good.
That's a true story.
Classic.
Yep. It's true.
Ian, what do you got? Anything? Steve, anything?
How about those Yukon Huskies? That's all I got.
Oh, you guys destroyed. Yeah, you guys are looking good.
Men's? Men's or women's? I can't tell who you're talking about.
The men. The men are number 1 team in the country. Very good. Very good.
Right.
Just wrecking teams.
Yeah.
Like night in and night out.
That's it.
All right.
I just can't believe the Niners lost. I mean, won. I can't believe they came back and won.
Nice comeback.
Crazy
game.
I was in bed by 7. So what happened? So the Lions took an early lead and then blew it.
It was 24-7, right?
24-7. It was 24-7 and then it was 24-10 at halftime, right? I think.
Big
24-7 at halftime. And then in the third quarter, there's crazy play, JC, where deep ball, it went off the Niners were on offense, and it went off the face mask of the Lions defender, and it fell into the hands of the Niners receiver. It like went off his face mask and it fell into the guy's hands.
Yeah,
it was amazing.
Yeah,
and then they won the game.
I don't think it's sad. I don't feel bad for people in Michigan. They've had a great run.
They did.
Michigan, first of all, just won the national championship, and this is the most exciting season for Detroit since like the 1950s.
It is. We're all grateful.
Yeah.
We're all grateful that it happened.
Yeah.
Yeah.
And by the way, I have so many friends from Michigan and Detroit, so I was rooting for you guys, but I don't feel bad. You guys have overachieved. Overachieved.
Very, very tough one. Yeah. All right. Cool. That'll be our show. Thanks to our guest today, David Rath. Thanks to Ian for hanging out with us for the last half hour or so. It is a normal Monday, finally. So we got the Flow Show back in the saddle, 11:30 a.m. Eastern time, right here on the channel, Stock Market TV, and on our website, stockmarkettv.com. And that's what we have. So, everyone, have a good rest of your day. Smash the like. Go make some money. We'll see you guys later.
Adios.
See you guys.
I can't take no